Today's video is on Appley, the covered call ETF that tracks Apple and yields about a 20% dividend. We don't know the exact dividend yet because it's not showing yet on their prospectus either. On their website here, you can see dividend, we don't know. But if it's like the other yield max ETFs, the dividend should be coming up soon, the date to qualify for the dividend. And so you need to get in before, usually the 4th or the 5th is what it looks like for other funds. So today would be that day for me to add to shares. I already own shares, but it would be your day to add if you haven't already. Except the thing is earnings is coming for Apple's tomorrow. So do you really want to add a full position now in Appley before earnings tomorrow? First, I just want to show you performance and value. We're still up 18% for the year. Dow's up 1, S&P is up 7, Nasdaq's up 15. So if you think that the dividends that I'm earning, the over 100,000 a year in dividends that I'm earning is risky, our performance and value says otherwise. And I do use a margin-based approach here at this channel, and I see my margin here is 243,000, and I'm using Appley and these other funds to pay back my margin debt, and my interest is about 5%, so it pays me to own these shares such as Appley. And so now the question is, how much of Appley should I own before the earnings tomorrow? And so I have 5,000 now. Should I consider a small short for Appley, like perhaps buy AppD? And you know, because if we go into a chart of Appley, we'll see that, well, we're not going to look at Appley, we're going to look at Apple. But here's a chart of Appley briefly if you want to see that. It's, if you've been in Appley since its inception, you've done pretty well. However, if you go to the chart of Apple, you'll see that it's at the highs. Apple right here at 170, or around 170, 169 is at the former highs here back in August. So to me, that's a warning sign. Now Microsoft blew out earnings and showed that it could just break out to a new range. But can Apple do that? Let me just see Microsoft, how that breakout was. Microsoft, yeah, we had, you know, it was back at the old highs here of August, but then the earnings came and it shot past. So, and we made a video on how to play Microsoft through some other funds. If you remember that video, we were trying to find more exposure to Microsoft, and now I'm trying to find more exposure to Apple through Appley, and we have 5K in it. It's at the highs. Can it break past those highs? Can it do what Microsoft did? So I'm looking at that chart and I'm taking that into consideration. I'm not looking too much at the fundamentals of Apple. You know, what's it going to do with, I don't know, it's Apple Watch. I don't even know what's relevant with Apple anymore. I really don't care because I just collect the dividends in Appley, which again, the X date is coming up for, and you need to buy now before that X date to qualify for the dividend. But I would say not to buy too much because it's at its highs. Now, should you use a short while Apple's at the highs? I'm going to just hold on to my shares. I mean, maybe 500 in a short makes some sense here because we're at the highs anyway. Even if we had a breakout like Microsoft had, I wouldn't lose too much in the short. So I'm kind of leaning towards that. But I don't want to be too fancy. 5,000 I have in Apple. Even if the stock falls 10%, I'm down 500. It's not a big deal. The dividend covers that loss. And I would just add to shares at that point because Apple is not a company that you want to short for long. It's not something like a Tesla. We're invested in Tesla through Tesla, and we're going to buy shorts through TSLS. And we were really debating on this in the comment section how much we should do of that. But Apple, I don't think you need to worry about as much. Now, you never know. Things happen. You never know. IAP, you saw the last video we made on IAP. That stock is getting crushed today. So things happen. Surprises happen in the portfolio. That's why you always do money management. You focus on money management, and that way, even when you're in margin, you don't get no margin call, you don't get hurt too bad, because if you focus on money management and position sizing, then no one position can take you down. So, IAP, we had 6K in that. You saw, again, the previous video on that. And Appley, we have 5K in. So I'm definitely looking at adding tomorrow on the dip if we get one. And we're going to increase our income significantly, this estimated income. And if we go higher, then it paid off for not buying the short, because I think that's what I'm going to do, is not buy the AppD short. Anyway, if you have a big position in Appley, maybe you want to consider that. But for me, I have a small position because it's covering a stock, and I only keep stocks at 1,000, as you know, in my position section. And if it's a fund kind of like Appley is, then I'll do 5,000. I'll even do 10,000 because it's such high quality and it's a large portion of the indexes. So Apple, as we scroll down here, we see it's 12% of the weighting in the Qs. So that's very significant. Remember, we're looking at Tesla before. It's almost 4. Now it's 3.6. So these fluctuate every day, but Apple is 12% weighting. So it's a good way to get NASDAQ exposure while understanding that if you keep, let's say, if I have $10,000 in Appley and I have a $100,000 portfolio, that would be 10% of my portfolio, and that is considered underweight if you're trying to match the NASDAQ. So here I'm just trying to match the indexes, the S&P and the NASDAQ. So having 5,000 in Appley on a $400,000 account is significantly underweight. So I don't mind owning or adding to Appley after the dip tomorrow in earnings. If we get a big pop after earnings tomorrow, then I sort of missed the boat there. But that's actually the time that you want to sell covered calls, is after a big pop. The fund will have we'll be selling calls at that point, and we'll have nice options premiums from it. And who knows, they could increase the dividend at that point. I don't know how that's going to work, but I just know that the dividend will be safe where it is. That's the main thing I'm concerned with, and there won't be any NAV erosion in the underlying. So in Appley. So anyway, I think this will do it for the video. Leave comments in the section below if you know of any better ways to play Appley, and I'll talk to you soon. Thanks.